The only thing I can say today is I think I've seen that all pairs actually work with my system, but there are pairs that are actually outstanding. Anyway, all pairs work, but there are pairs that are very slow, that before they repeat a particular pattern, it's going to take a lot of time. Do you understand? So, but for some certain pairs, it's not very difficult for them to repeat a particular pattern. Okay, so people have been asking me the pairs I recommend. These pairs, this okay, good. And everybody already know that I trade gold. So gold is actually the first recommendation as always. So what else can I tell you to trade? All right. I can recommend gold, which is one, depending on how you guys perceive the charts. It's going to depend on that, right? So one is going to be gold, two is going to be UK 100, even though UK 100 hardly presents set up recently, we have German 40, we have GBP USD, we have Euro USD. Euro USD and GBP USD, you have to pick one and let one be from my own experience. But we also have BTC, very, very good. BTC is extremely good. Better than UK 100, better than German 40, better than GBP USD, better than Euro USD. I think after gold, it should be BTC because I stopped trading BTC because I trade profits and it is spoiling my percentage risk. I don't know if you guys understand. I cannot risk up to 2% on BTC. In short, I cannot risk up to 1%. In short, I cannot risk up to 0.5% of my account. So if I want to trade BTC, I'm going to risk 0.25% or 0. Let's say 0.5% highest. So if I hit TP of 8R, instead of me to make 8% or 16%, I'll end up making just 4%, which is it's spoiling you understand, my trading plan. So I stopped trading BTC. But BTC has been my best pair 2024. I've said it. 2024, there is nothing that gave me money more than BTC. There is nothing. If you see wins for BTC, ha! So BTC is very, 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 very good with the doctor system. And then finally, I can say NZDUSD. So we have NZDUSD. NZDUSD is very good. Sometimes, see, most of the time, it's better than GU and EU. NZDUSD is very good. Then some people say USD CHF and USD CAD. My own experience, I've not had very good experience with USD CAD and USD CHF. But the pairs I have a very, very good experience with, I would say I have gold, UK 100, German 40, GU, EU, BTC, and NZUSD. Now, this UK 100 and German 40, there is the pair they call JP225, also have a very, 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 very good price action. There is a pair they also call, I think I've went some, these indices, they have very good price action with the doctor system. The only problem is that some of them you cannot risk a lot based on your prop firm. Some prop firms don't even have some. Some prop firms don't have some. Well, like I bought a prop firm of Audacity Capital. The Audacity Capital I bought, I blew phase two, right? The phase one, I passed. I had a very beautiful trade. I would have passed the trade, the account in one trade on UK 100, if I can remember. UK 100 was not there. There was no UK 100, there was no German 40. It was only gold that I can trade out of the pairs I used to trade. So you see, it's not all the pairs, all forex, or let's say all forex prop firms or CFD prop firms that you're going to find all those things. And some of them have high spread. But you see, these ones I recommend on my screen, I will say, especially gold 1, BTC 2, NZDUSD 3. They are very, very, very good. A lot of you people don't go through NZDUSD, but today I will use it for my session. Probably you guys will see something. I don't know, it's been long I went through NZDUSD, but if you guys went back, go to my Telegram channel, go back small, let's say like 1 year back when I opened the Telegram channel, look at my performance on NZDUSD, go back and check. You get? So NZDUSD has a very good price action. Now, USD and GBP have been two of my outstanding pairs last year, 2025. But this year, the price action of GBP it is not giving. It has spoiled. Like using it to teach, I cannot even see what I want to see. If I don't trade it anymore, but using it to teach you, I cannot see what I want to see. Which is very discouraging. So I cannot say much about USD and GBP JPY anymore. But before, they were actually very nice. So these are the pairs I would say I have seen. Some of you might have seen some that are better, that I've seen and they work very well. EU and GU sometimes very confusing. I prefer GU and or EU. Sometimes you just have to prefer one. And correlation knowledge is sometimes interfering with what we have in our brain. So today we're going to be using NZDUSD and we're going to be having a little bit of session with it. This is good. So I'll switch to NZDUSD. I would see what we have. So we're going to be doing a recap based on NZDUSD. But I want all of you to get your pen and your paper because I'm going to be telling you guys so many things I've already said, but they will definitely help you, right? So I gave you guys the type of pullback I want to see. Let me go to NZDUSD first. Now, I'll give a quick recap also on what I've been teaching or things I've been saying on the chat, right? So we'll start from the weekly time frame. So this is NZDUSD on the weekly time frame. So now, anytime the weekly candle closes, you want to go into the weekly time frame and you want to see what the market is doing. Every time, that's what I said, the weekly candle closes. We expect the market to go to a weekly key level before the journey starts. One. Or, secondly, anytime a weekly candle closes, you want to see the market start a new storyline. One of the two is what you are looking out for. All right, good. We're going to be discussing this particular week, right? And then we'll see what the market would have done during that particular week. Now pay attention. Now this is an NZDUSD on the weekly time frame. So we have the previous week before the recent week. This candle closed this way, and then the next week candle open, drop down, tap on this QM. Can you see that? So just pay attention. We are bearish because the most recent breakout on the weekly time frame is this, but we can still use candlestick to generate our own directional bias, right? Direct candlestick rejection. So the market came here, look, the tap on the weekly time frame, and then we go into the daily time frame. Now on the daily time frame, you're going to be looking out for the most recent breakout, which is one of the things I love. On the H4 time frame, most recent breakout. And I've said to my student that, see, most recent breakout is one of the most effective method of getting your directional bias. One of the most effective. Just go to the H4 for the day. Look out for the most recent breakout. Follow the direction for that day. It's enough. It's enough to tell you where the market is going to. The only advantage is that, see, for a direction to be confirmed, you need it to be available on two different time frames. For example, the daily and the H4 should be in correlation, or the weekly and the daily should be in correlation, or the H4 and the H1 should be in correlation, or the monthly and the weekly should be in correlation. That is what makes it effective. When you come to the 4-hour and you look at the 4-hour most recent breakout, it is okay. It is okay for your direction, but you need one more time frame on the higher time frame, H1 or daily, to be supporting that idea. And that's what's going to increase the probability and your confidence in that particular trade. So these particular little confluences that we are adding to is what is going to generate that confidence, and you guys are going to avoid fear in execution. Yes. All right. So we have this market rejected and then give us the most recent breakout. Right, good. So we had a breakout on the daily time frame. People will be like, hey, doctor, the market kept going up. Where would you execute from? Okay. So I know NZDUSD give a lot of opportunities. I don't really know, but we are doing the top-down analysis. So we'll look at it. So after the market dropped down into this and give us a daily breakout. So I told you guys, 4-hour most recent breakout is one of the best methods you're going to get your buyers. And I'll also tell you guys another thing. There are times, pay attention, that the market will do something like this, right? The market will reject from a key level. The market is going to come up, tap, and break. And then you'll be expecting the market to come to the apex. Let's say this is mitigated and you're expecting the market to come to the apex. And you see the market come very close to the apex and sell. Now I'll tell you why. So if you see this type of things and you expect, and the market did not come to the apex and start selling, now, if you go to the lower time frame around this area, there's either going to be a model 3 or a valid structure very close to that zone that is going to disallow the market to come to that zone. If you see those particular things at the higher time frame, but it is very close to the H4 key level, execute from the one on the lower time frame, but make sure your stop loss cover the entire high. I would advise you, because this is something I've seen happen a lot of times. Okay, so there's going to be usually a model 3 is what is there. So you have this on the daily time frame, market rejected and gave us a breakout, so we are bullish. We'll go into the H4 time frame. So anytime we see H4 most recent breakout to the up or to the downside, we can trade, because it is a method, or it's a normal way of getting directional bias. Oh, my network has stopped. My network, oh, what's wrong with my network, guys? Okay, good. So now, we'll start paying attention from this area. We'll start paying attention from this area. I've told you guys and I've told you. Now, let's look at NZDUSD and let's use it for the study. Now, look at market drop all the way down. Now, just look. Did the market give us a breakout below here? Yes. Right? Market gave us a breakout below here, which is H4 most recent breakout. But this is where the breakout started from. But you're not interested in all this bearish movement. You're interested in the bullish movement, because we all know we are bullish. So we're going to be paying attention to this. So this is where we have the most recent H4 breakouts to the upside, right there. Okay. And then market went all the way up and then pull back down. Now, from this H4 time frame, I want you guys to learn, and I've already taught you guys so many things. What is this? These are imbalance. So even from the H4 time frame, without going to the lower time frame, you know that the low of this candle is liquidity, right? Because there's an imbalance below here. Now, where are you going to be executing from? I've told you guys that on a daily bullish storyline, all H4 bullish key levels are supposed to be used for buy, not all. Okay, I've already said this thing severally. There are ones that you can explicitly how did they used to say that are explicitly exceptional, that you are not going to be using them, right? There are some that those are the ones you're going to be using. Now you have this imbalance right here. Okay, very good. You have the QM, very fresh. You have the OCL, very fresh. You have the apex, very fresh. These are the key levels you want to use for execution. Quite all right. Now you have this particular imbalance right here. You have this QM, which you're going to be refining into the H1 time frame, 30 minutes time frame, and sometimes the 15 minutes time frame, for you to see what you can do off of this particular move. Now let's go into the H1 time frame. You can go into the H2 sometimes. H2 time frame makes a lot of sense for whatsoever thing you want to do. Now on the 30 minutes time, on the 1 hour time frame, you can see we have several. So automatically you're going to use this for your refinement, which is an engulfing that field what? Twice. So this is going to be your zone where you're going to be executing from, right? Okay. So this is going to be your zone of execution. We take a look at it. I've already explained this thing severally. This is what a QM, which is an engulfing that failed once and twice. And then after this one failed, pay attention. Pay attention. This is something I've told my students usually in the lifetime, that once a candle closes above and then the market immediately come back to this particular QM, it can be used again. This is the type of QM that I'm trying to call a model 7, but not yet finished working on. This one, the market came back to it, rejected, gave you like a 1 to 2, but still came back into your entry, probably take you out on break even and then continue. So now, this is going to be a move for you to capitalize on, right? Okay, now, after the market rejected and the market have started moving, you still come back to the H4 time frame and you're still going to be continuing looking for moves. Now, if you pay attention, market rejected, create another OCL right here. So people will decide to execute from either this OCL or this apex. Why? Because there's a H4 time frame, and the H4 time frame is supposed to be used for continuations. Do you understand? So one of these two is going to be used for continuation. Now remember something I've always said. Your higher time frame, you want to see a H4 or a daily key level. Sometimes it doesn't reach there, but on your lower time frame, what do you want to see? A break of structure. Bro, a break of structure is different from a breakout. Hope you know. A break of structure is a type 2 break. That's what they call a break of structure. But The candle closing above the wick is what we call a break of structure. What do I mean? This is a breakout like this, but this is a break of structure like this because this candle closed above this. So if you want to enter a trade, you want to see a break of structure like this. You want to see a sweep, a break of structure, a structural liquidity, or an inducement, or an engineered liquidity. You want to see a key level overlapping with a higher time frame key level. You want to see a key level that is high probability, meaning it has to be an RBS or an SBR overlapping inside an imbalance. Or you want to see a QM, which is an engulfing fill twice. Or you want to see a QM overlapping inside an imbalance. Or you want to see an apex that took out liquidity. Or you want to see an engulfing candle. I've already discussed all these things. These are high probability zones that you see market rapidly reacting from. Now, and also, you want to see a break of structure, and the highest point of interest comes from the origin of that break of structure. Very, very simple things. Now, once the market started moving, I use this to explain the break of structure. Once the market start moving here, the market start give these two moves, you know you are bullish. So you look out for this or this for a continuation entry. Now, you'll be like, why not this? It depends on the criteria this one have on the lower time frame. So we can go to the 15 minutes time frame, and we're going to see what criteria that particular first one have. So you see, if you take a look at this, what do you have right here? Please, what do you have? The first thing you see is, let me delete all this. The first thing you see is a break of structure that happened above here. It makes sense. Or above here, anyone you want to mark. So valid. What is the an inducement? And your higher time frame zones already showed yourself. So you can, if you use this, which is one of the best, this key level that got tested, right? You guys should give me a minute. Give me a minute. Give me a minute. All right. So basically, um, this is it. All right. So most of us are going to be picking this one, but when you see the inducement, the pullback right there, pay attention. Market pullback, and market decide to use this particular keyword right here, which is also a very good one, right? And then this is where the entry came from, inducement, entry, and then the market just started from that particular place. Did you see that? So if it was me, I would have probably choose this one, but you can see the criteria that were there. Okay, all the criteria were there. Did you see that? Okay, so when you continue the move, you can come back into the daily. Now, I said anytime a daily candle close, you want to go back to the daily time frame. Okay, very good. The market started, pushed up, came into this. When the market created this particular thing, most of us are going to be waiting for the market to come into this OCL, but not all the time. I've always said this thing. Not all the time that you wait for the market to come to OCL for continuation. When there is an imbalance below, it is okay if the market come into the imbalance. Have I said that? Yes. So your refinement can come within the imbalance too. It can come even as low as this. It just depends on how you understand structure. But since we are in the daily 4-hour bullish storyline, if you are inside this imbalance, make sure you have a H4 key level, H1 key level inside. Sometimes there's not going to be a H4 key level, but there's going to be a H1 key level right there. Do you understand? So you come into the H4 time frame, you look out for something like that. Now on the H4 time frame, I will chill. I am not going to trade. Why? Because when the market was dropping down, market gave us a type 2 breakout. So I'm not going to trade. I'll chill. It's already this little breakout before even coming to this, which is the OCL, has already given us an information that I don't want to go. But let me shock you. Did you guys know that this market dropped down, tap on that OCL first, which is where the entry is going to come from. Yes, after the market tap on the OCL, give a heavy push to the upside. Did not, this is supposed to be your TP. The market did not take out that high. Did you see? The market now gave us a type 2 breakout. So once the market pull back and this candle close below this, I'll close my trade. Why? Because a type 2 breakout has happened, signaling bearish movement. So you end up closing a 1 to 1 or 1 to 1.5 because your entry is here. And this entry is valid. Why? Protected low, imbalance, drop, rejected, push to the upside, give you 1 to 2 or 1 to 2 point something. This should have been like a 1 to 5. And then this candle drop down close below here. Once it's got drop down close below here, you close your trade. Why? I've already told my students so many times. For me, I'll close. All right. Then what now continue happening is market came, did not close below here. Sorry. Okay, very good. Okay, now very good. Now very good. Market came, dropped down, went up and gave us a type 1 breakout on the H4 time frame. Again, after the type 1 breakout on the H4 time frame, we are bullish. What do we expect? QM, Apex, anyone to hold? Market drop down. This will have been a stop loss for most of us. So market is definitely high probability going to hit our stop loss on this particular move. There is nothing you will tell me. Most of us are going to take a loss on this particular move. So because we're expecting the market to move bullish, but the market came, if you use this, take you out. If you use this, take you out. So anyone you use, market decides to take you out. So, but in the price action again, the market continued. How? The market gave us the most recent H4 breakout because we are bullish. After the most recent H4 breakout, what do we have available here? Apex have been used. The only available thing we have is the OCL right there. So what do? You refine the OCL into a structure on the lower time frame. You know what you want to see on the lower time frame. You come into the H1 time frame. Let's take a look at on the H1 time frame. What do you have on the H1 time frame? A valid zone of execution. And that is all you're done. Hey, doctor, oh doctor, you did not teach. Oh doctor, what? This is your execution. You just refined and you have what you're looking for. Did you see that? A protected low liquidity and everything. Boom, and then you buy. Okay, market continue, market tap and continue. What do you have? H1 breakout again. Another entry right here. And then with liquidity. Go back to my class on candlestick structure. I've explained this thing severally, not once, not twice, not 3 times. If you don't want to use here, you can also refine. Refinement is valid. See, those people that trade that they are small stop loss, that's what they do. The only thing is that I don't do small stop losses. I don't believe in small stop. In short, I don't believe in small stop losses. Right? So you can see on the 30 minutes time frame makes more sense. Imbalance right here, which means this low is liquidity for this particular area to hold. You can come as low as the 15 minutes time frame. It just depends on you and what you want to see right there. Did you see that? Okay. So that is for that. You still come into the H4 time frame. This is what NZDUSD. Markets continue moving into the upside. Now, you expect the market, you see, market came back into this H4 key level. Use this one, use this. Those are the entries, bro. Okay, market continue moving to the upside. Let's say I don't want to use the daily. Let's say you are using the H4 time frame. Let's say you're using the H4 time frame. It's okay. It's okay. For you to use the H4 time frame without checking the daily. Yes, it's not Mondays. Let me say not Mondays. Don't do that on a Monday. Market, on a Monday there is a lot of manipulation. Do you understand? So basically what happened? Market came again, just give you the most recent H4 breakout right here. After the most recent H4 breakout, this one, market drop down. Market has used the QM, I've thought. Market has used the Apex. Yes. The only available thing is what? The OCL. Hey, but doctor. The only available thing is the OCL. See, when it comes to my system, it's not only my own, it's something I've learned from different people and a most of my experience that I blend into a system, which I've already said severally to all of you. That's why I say when the QM is not fresh and the Apex is not fresh, use the OCL. And you can see the OCL right there. So the QM not fresh, the Apex not fresh. The OCL there is just sitting pretty looking at us. So we do this and box the OCL. This is the extent of refinement of the OCL, right? And we also have this. Remember, I'm not a fan of 1 to 10, 1 to 20, 1 to 30. You just need to look for a move that is going to make you money. I beg. That's what I do. My consistency in payouts have not been 8K, 10K, 20K. I've always said it's 2K, 3K. Bam. And you guys can see the consistency. I said I'm not going to post my payout anymore because there is some oppression and everything. But the consistency in my payout, anybody that knows me, in a month I receive, let's say 5 to 10 payouts every single month across different firms. But the consistency in that 2K, 2.5K, and 3K you are seeing is going to build up 20K, 18K at the end of the month. That's what consistency is. Not receiving high payout and tomorrow you blow the account. Do you understand? Then this market come back into the OCL. Okay, now you refine the OCL of the H1 time frame. What do you have? Hey, look at this. Did you see this? Key level, imbalance, liquidity. Okay, now you can still refine. Let's go into the 30 minutes time frame. On the 30 minutes time frame. Okay. Now let me look at this. Let me look at this. If this have not been used, this is our end. Beautiful. Now, do you see the importance of going to the lower time frame? I'm not using this, I'm using this. Why? Look at this. You see, engulfing candle that failed. Look at the way this one did not touch. Look at the imbalance. Now, this is your liquidity. Choose this area, place a proper stop loss. What did I say? A proper stop loss, and you go down. Did you see that? Inside that OCL, a proper stop loss. I've always told you guys. Okay, now what do you do again? You still come back into the H4 time frame because a bearish movement have started based on the H4 time frame. Now, markets can give you another breakout here. Once you have a breakout like this, it's telling you that this is the highest point. The market is not supposed to disrespect this. The market started dropping. Now, after the breakout, this candle gave us the breakout. The next candle pulled all the way up. This is where most of us want to execute from. Okay, this is the scenario I explained. Thank God. This is something I just explained. Thank God. I told you guys there are scenarios that the market don't come in. I bet you, once you go into the lower time frame, you're going to see something that is going to show you a sign the market is not going to go there. But make sure your stop loss cover that entire zone. So now let's mark it out. Let's go into the H1. On the H1, you have this. Makes sense for you to execute. Most of us are going to be choosing this. The market came back to use it though. But let's see. Let's go into the 30 minutes. You can see the 30 minutes. Let's go into the 15 probably. Why is the network bad? Bro, I don't like this. Gosh. Why is the network bad? Can you guys hear me? Or my network just stopped totally. All right, very good. Now look at this. Just look at this. Did you see what I just said the other time? You're going to usually see this, which is what? A model 3 on the lower time frame. It's usually very strong. So when you enter here, make sure you cover the entire loss, the entire zone, and then the market drop again. Did you see market still drop again? So how many trades have you seen on NZDUSD? So this is how good NZDUSD have been since before when I used to trade it. The only problem is it is slow. It is slow and it is slow. But the price action is very good. Look at the liquidity, everything, the pullback came, tap, and then drop. Did you see how NZDUSD have been very, very effective? You can see this one too on the 15 minutes time frame. Key level that have been tested, liquidity very close, use that, and then they sell. So one sell, two sell. When you're coming to the upside, another buy, another buy. When you're coming to the upside, this place I said, this place has not loaded. All of us are going to take a loss because I'm going to be buying around here, but I'm going to be taking an unnecessary, or it's not gonna, I'm going to take a loss. Here, if you use here, you enter. If you use here, you miss entry.